Good morning this Wednesday, the 19th of July. I'm Grady Wolf, a market analyst with Bell Direct. US equities rallied on Tuesday with the Dow Jones closing higher for a seventh straight session on the back of stronger than expected earnings results. Bank of America shares rose 4.2% after it reported earnings above expectations for the second quarter thanks to higher interest rates, while Morgan Stanley added 6.2% after beating on both revenue and adjusted earnings per share. The Dow Jones closed up 1.06% on Tuesday. The S&P 500 added 0.71% and the tech-heavy Nasdaq ended the day up 0.76%. Earnings season kicked off this week, and while the expectation is for a poor reporting season ahead around the world, it may be early days, but so far it's pretty strong. It's a very important period this reporting season to see exactly how companies have weathered the high inflation, high interest rate storm of the last financial year. US retail sales data out overnight showed an uptick of 0.2% month over month in June, which was below economists' expectations of a 0.5% increase, indicating American consumers are feeling the brunt of interest rate hikes on the consumer spend front. Over in Europe overnight, markets rallied as investors in the region assessed earnings results out of both local and US corporations. British grocery delivery firm Ocado was a top gainer amongst European stocks as it soared 19% after reporting a swing to underlying profit for the first half, though a wider group loss before tax, while the company also rallied amid rumours of being a takeover target from Amazon. The stock 600 rose 0.6% on Tuesday. Germany's DAX added 0.35%. The French CAC rose 0.38%, and in the UK, the FTSE 100 added 0.64%. On the local share market, it fell 0.2% yesterday as investor sentiment was dampened by the release of the RBA's latest meeting minutes, whereby the prospect of further rate hikes to come was outlined if inflation in Australia doesn't fall to the target range of 2 to 3%. This naturally caused investors to sell out of REIT stocks yesterday as rising interest rates devalues the properties owned by REIT companies and raises the costs associated with running the REIT assets. Retailers took a hit as well yesterday as investor fears of rate hikes hit the consumer discretionary sector again, which traditionally feels the full brunt of interest rate hikes in the form of high costs and lower demand. The big four banks all rallied yesterday though, which offset some of the heavy losses for consumer discretionary and mining stocks. Shares in manufacturing company Ansell tanked over 14% on Tuesday as investors responded to the company's trading update outlining guidance for both FY23 and FY24 and the outlook for higher costs in the new financial year. The company's guidance outlined the expectation for industrial GBU sales for FY23 to have fallen over $12.5 million from FY22, while organic growth was achieved in both mechanical and chemical divisions. Healthcare GBU sales were also down over $200 million from FY22. China's GDP for Q2 out on Monday came in at growth of 6.3% for the quarter, which fell short of economists' expectations and provided a further sign of the weak post-pandemic recovery out of the world's second largest economy. On the commodities front this morning, oil has rebounded from lows earlier in the week to trade 2.06% higher at $75.68 a barrel. Gold is up 1.13% at $1,976.76 an ounce, and iron ore is down 1.28% at $115.50 a tonne. One Aussie dollar is buying 68 US cents, 94.58 Japanese yen, 52.12 British pence, and 1 New Zealand dollar and 8 cents. On the economic calendar today, the annual UK inflation rate data for June is out this afternoon, with the market expecting a slight decrease to 8.2% from 8.7% in May. Ahead of the local trading session here in Australia, the SPI futures are anticipating the ASX to open 0.54% higher following the global results-driven rally overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the price target on Cyclopharm and maintained a buy rating on the healthcare company following the release of a trading update outlining revenues of $15.3 million for the first half of FY23, comprising around $7.5 million in Technogas revenues and the remaining $7.8 million from third-party distribution sales. Cyclopharm is also also on watch in the lead up to the FDA inspection of the Kingsgrove manufacturing facility ahead of the FDA approval decision expected on the 29th of September. And Trading Central has identified a bearish signal on Dicker data following the formation of a pattern over a period of 90 days, which is roughly the same amount of time the share price may fall from the close of $7.96 to the range of $6.60 to $6.90, according to standard principles of technical analysis. And that's all we have time for today. Have a wonderful Wednesday and happy investing.